We want to go to financial questions. We have Jeff, who is a question on ERTC and income level. Thank you, Jeff, for being faithful.
Hi.
You've been trying to get on for a while. I'm sorry to delay.
Well,
go
thanks
ahead.
for taking the call. So a question I have, two questions on the ERTC. One, if your income is not low, 20% low in the first quarter into 2021, but is low in the second quarter, can you take it for the second quarter? And the other question is for 2020 ERTC, did your income have to be down 50%, not 20%? And can you still claim the credit if you haven't claimed it yet, if you were down 50%?
So the employee retention tax credit, great question. Thanks for calling in. Let me just give a quick overview, very, very quick. The employee retention tax credit in 2020 is if you had a significant decline in gross receipts is defined as 50%. You're comparing that quarter in 2020 to 2019 to determine if you have that reduction. In 2021, it is only a 20% decrease in gross revenues, gross receipts, and you're still comparing it to 2019. So first quarter 2021 is compared to first quarter 19. Now, there's a little caveat I'll throw in there that if fourth quarter 2020 is down at least 20% according to fourth quarter 19, you would qualify for first quarter 2021. But let me be clear, in fourth quarter 2020, for fourth quarter 2020, you have to be down 50% to qualify in fourth quarter 2020. Now, yes, you can go back. It's retroactive. You'd file a Form 941X. It's on any wages that were paid March 13th and after. The other way to qualify, and it's not both things that need to happen, it's either or. If the government has an official order that either partially or fully closes or shuts down or affects or limits the business, then during that period of time, you would also qualify for the ERTC. So some have both circumstances. Here's the big thing. If you're down gross revenues, then the wages qualify for the entire quarter. In 2020, if you're 100 or less employees, then all the wages during the applicable time of qualifying for ERTC, you get to include all wages, whether they worked or not, essential or not, exempt or not. You get to include all wages. In 2021, it's 500 or less employees, and you get to include all wages. Now, if you're above that, then you only get to include wages for those employees that were paid and did not work. So it's 100 employees or less, 500 or less in 2021. 2021 has been extended to 12/31 now, the American Rescue Plan Act. It was to end June 30. It now ends December 31st of 2021. Here's the biggest thing I want to make sure everybody hears, Josh. You ready for this? In 2020, it was a $5,000 per employee tax credit. In 2021, it's a $7,000 per employee tax credit in each quarter, which has been up to $28,000 tax credit in 2021. Now, owners, I don't think it's an opinion anymore, owners that own over 50%, their spouse, their family, those wages are not included. So definitely need to take a look at this. How do you get it? Form 941X for 2020.
How do you get this? Well, wait.
Yes.
We got to get it a little bit more so that the rest of us can understand it. So a lot of numbers thrown out there. You got to talk to your accountant about the ERTC, and you're eligible if only you had a decrease in 2020 or what? So if you did okay in 2020 or better in 2020 or the same, you can't get this, correct?
Well, let me back up for 1 second, if you don't mind.
Sure.
Go to JJ the CPA YouTube after this show, okay? And I have at least 100 videos on the ERTC. I have a playlist on the ERTC. I have a seminar, 7-hour seminar, a 5-hour seminar, 10 videos, calculations, Excel spreadsheets, gross receipts calculations. So I have
Wow.
5 different Excel spreadsheets for you to break out. I did sell the seminar. It's $197. You're getting, I don't know, 25 hours of videos and tons and tons of links and how to do it and how-to videos. And so jjthecpa.com, you'll find how to sign up for that. It's instant access to all of that.
Wow.
Yes, there's a lot to it. There's a lot to it, Josh. But to answer your question, you're always comparing to 2019. So when you're trying to determine if you're down in 2020, you compare to 19.
And you have to be down by how much percent?
Yeah.
25%?
If you're trying to determine how much you're down in 2021, you still compare it to 19. Now, to answer that question, you have to be down 50% in 2020 compared to 19. Then in 2021, you have to be down 20% for the quarter, still compared to 2019. So much lower threshold in meeting the gross receipts.
So let's say you had a better 2020 than 2019 by some luck of chance or blessing of God. But then 2021 first quarter was down because maybe you have a funnel. A lot of businesses will have a delay. You still get it, but you only get it for that one quarter. Is that how that works?
Yeah, you hit it right. If 2020 is up, you're not going to qualify on that criteria. But in 2021, if your first quarter is down from first quarter 19, then you're going to qualify for first quarter 2021.
And by the way, folks, I'm seeing that. You know why we're seeing that? We're seeing that because of the threat of tax hikes. A lot of businesses are saying, whoa. We believed because we were given some tax breaks, we were given some PPP, but now, the business owner is the enemy now. So tax hikes are coming. People are thinking capital gains raises, all these things. So people are like, whoa, let's slow down. Let's slow down our spending for business. And that's why we have to keep this pro-growth, low-tax mindset. So we have Tony, who has a question on reporting income from liquidated trusts. Our listeners are the smartest people in radio and now YouTube. So go ahead, Tony. You're on.
Joe. I have a question for the CPA in reporting income on my tax return. I was an owner of a bank stock 15 years ago that went bankrupt during the financial crisis of 2008. And in 2020, I received a letter indicating that there was a liquidation of the trust set up as a result of that bankruptcy. I received a letter indicating I have some income from it, but it's not a 1099. It's a letter from the trust. How do I report that income on my tax return?
So typically, money that's getting allocated to you from a trust that is not interest income, it is not dividend income or capital gain, because typically that'll come on a 1099 INT or a 1099 DIV or a 1099B. So the fact that you've got a letter and it didn't accompany anything else, it would be on Schedule E, page 2, down at the bottom. You will see a section where you report income that you're getting from a trust. So let me be clear, not all income from a trust would go on Schedule E, but in the absence of knowing what it is, I would be putting it on Schedule E, page 2, to be clear. There's a Schedule E, page 1, that's for rental activity and royalties and whatnot, but it's Schedule E, page 2, that goes along with the Form 1040. It'll be ordinary income taxed, and so pretty safe bet that it's going there. I would follow up if you are able to see if there's a K-1 that goes along with that, because on a Schedule K-1, it will then break out if it is something other than Schedule E, page 2 income. It could be that it is interest or dividends or capital gains or royalties, etc. So when a trust has income, it keeps the same tax characteristics as if you had earned that yourself. But at the end of the day, you would want to then put it on there. I would make sure this, though, that just because you are getting money, cash from a trust doesn't always equal the amount that you pay tax on. It sounds weird. That's why I'd ask for the Schedule K. I'm going to say, hey, Richard, the CPA, you're just going to have to email me. I'm not able to keep up with comments clear enough. So email me, Richard, so that I can clarify what you're asking, if you don't mind, Jay. That's Richard, the CPA, great fan of this. And on that trust, make sure that what you're having to report is taxable income.
It mentions in it that it's a distribution. It's not a large amount. It's less than $1,000. It gives a distribution and a net operating loss, which is a small fraction of it.
Yeah, it sounds like you could use an appointment. Give us a call, 888-988-JOSH. We could hook you up with somebody to talk to. Folks, we have available a free 45-minute webinar, complimentary, if you schedule and keep your no-obligation review. And folks, this is a rare opportunity for you to get a 27-point ultimate financial game plan where you can learn how to protect your assets, potentially minimize taxes, and grow your wealth in these uncertain times. A lot of you are concerned about the economy, about an economic slowdown. We're going to talk about one way we could have an economic slowdown next. The gig worker bill. This is Josh Jalinski, the financial quarterback. Call me right now, 888-988-JOSH, and go over to retirementrealitycheck.com and check out my YouTube. Search for The Financial Quarterback on YouTube and hit the subscribe button. We'll be back after these messages.
The preceding program was sponsored by the Jalinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.